So CPI landed, the market blinked, and the US dollar basically said, well, nice try, volatility. I'm busy. Because after all the drama around Fed independence, CPI meeting expectations has somehow become the most calming thing we've seen all week. But here's the real question. Are we trading inflation right now or trading what happens next? Well, let's answer that. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning. I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief. Today, we are breaking down the AUD-USD currency pair, WTI crude oil, and the Germany 40 index. We're going to kick things off with fundamentals, move over to technicals, and add just enough humor to keep the mood lighter than, well, a core CPI at 0.2% headline. Let's start off by setting the macro stage. The dollar index rose towards 99.2, near its highest level since early December, as US CPI largely met expectations, meaning it didn't change the near-term view that the Fed is likely to keep policies unchanged this month. But underneath that, as expected headline, there was a detail worth noting. Monthly core inflation printed at 0.2%. This was below the expected 0.3%, which signals easing underlying price pressure. And despite the Department of Justice threatening Fed Chair Jerome Powell with a criminal indictment, markets calmed after support for Powell was expressed by other major central bank heads, as well as the Wall Street bank CEOs. So now attention turns to US PPI and retail sales reports later today for more cues on the economic trajectory. So today's mood in essence is, well, CPI didn't flip the tables, but PPI and retail sales might still rearrange the furniture. That being said, let's get into the instruments for today. AUD-USD is hovering near a 2-week low around 0.669 as markets reassess the timing of the next Reserve Bank of Australia's move. So here are the key probabilities. The chance of a February hike is around 27%. This is down from nearly 40% last week, but markets still see a 76% chance of a hike by May. So expectations haven't disappeared. They've just shifted further down the calendar. And the data is also mixed in with a slight pullback in November inflation and failing consumer confidence, which is adding uncertainty around February. 0.2% dip in jobs vacancies in the November quarter suggests stable labor demand, but not overheating. But a strong November household spending could keep inflation elevated and keep the case for tighter policy alive. Now, the next key risk event for Australia is the Q4 CPI release later this month, with a stronger than expected core reading likely to increase pressure for an earlier hike. Markets are also watching the next week's December jobs report. So the Australian dollar is basically in waiting mode. Not weak because of the fact that the story is bad, just because of the fact that the next chapter hasn't been released yet. Looking at the charts, immediate downside support is sitting around 0.668, followed by 0.66 flat. On the upside, if bulls regain control, they would have to overcome the immediate resistance at around 0.672, followed by the current 2026 ceiling at 0.6766, and then the 0.6942 level, which is the September 2024 high. And of course, we still have that psychological 0.7 level pending. So if quarter four CPI surprises later this month, does AUD USD stop hovering and start moving with purpose? Or do we stay stuck in this 0.668 to 0.672 waiting room? With that, let's move over to commodities. WTI is hovering around $61 a barrel, holding most of the gains from a 4-day rally near an almost 12-week high. And the driver here is very clear. Supply risk headlines are doing most of the heavy lifting. Key points to note here is the fact that investors are awaiting comments from US officials on Iran ahead of a White House meeting. US President canceled talks with Iranian officials until protests subside, while signaling support for demonstrators. Unrest in Iran and the risk of US involvement could threaten roughly 3.3 million barrels per day of Iran's oil output. US President also warned that countries doing business with Iran would face a new 25% tariff, adding to concerns about supply disruptions. Elsewhere, we've got additional supply disruption themes. Attack on 2 oil tankers near the Caspian Pipeline Consortium's Black Sea terminal disrupted Kazakhstan's crude exports. Harsh winter weather and mooring damage amplified these delays. But then there is a counterweight. API data showed US crude inventories rose by 5.3 million barrels last week, potentially the biggest build in 2 months if confirmed. And we also have another pressure point. WTI declined below $61 a barrel as Venezuela resumes exports, including what might be early shipments tied to a 50 million barrel supply agreement between Caracas and Washington after the US capture of the Venezuelan president. So oil right now is sitting between two major catalysts. On the one end, we have geopolitical supply risk pulling prices up. And on the other end, we have inventory builds and resumed exports trying to pull it back down. So WTI is trading like it's got two bosses. One is geopolitics, the other is the inventory report. And neither one is sending consistent emails. Looking at the charts on the 4-hour time frame, the stochastic is flashing oversold with price sitting just below the resistance level at $62 a barrel, followed by 65.5. Based on current momentum indicators, we could see some short-term consolidation or even a potential retest of that $60 level before we move higher. So the technical behavior to watch is whether WTI can hold that $60 area after this rally that we have just seen, or whether inventory pressure starts to drag it into deeper pullbacks. Finishing things off today with equities, the DAX closed marginally higher around 24,411 and continues to print new all-time highs, with traders weighing a mix of US inflation data. Obviously, yesterday we saw US core consumer prices rose less than expected in December, supporting hopes of a sustained slowdown and opening the door for rate cuts later this year. Corporate updates and earnings season have also provided cues, with attention on JP Morgan's report kicking off the US session. In Germany, key movers were Sunrise, which jumped around 5% on plans to divest its Japanese business and announce a 400 million euro share buyback. Zalando also gained around 4.5% after Barclays upgraded it to overweight. On the downside, however, medical care dropped around 2.5% and Heidelberg Materials around 2.6%, as well as Continental, which was down around 2.4%. So the DAX story is less of one big catalyst and more of multiple small engines. inflation, relief vibes, corporate action, and rotation. Looking at the charts, the DAX is trading around 25,420, up roughly 0.3% on the day. The index is trading in unfamiliar territory, currently sitting just below the 161 Fibonacci extension level. Momentum indicators are also showing signs of fatigue. Hence, a small correction here would not be out of the norm, potentially pulling back down to the 100-period exponential moving average, which is sitting around 24,800. So technically, the market is operating in all-time high territory, which usually means traders watch for whether momentum holds above recent breakout zones and whether leadership stays broad or narrows into a few names. So the question here today is, can the DAX keep making new all-time highs if global sentiment turns cautious again? Or does new highs quickly turn into new headaches? So in essence, traders, the setup for today is as follows. The dollar is firming as CPI didn't change the Fed's whole narrative, even with Powell headlines calming down. The Australian dollar is waiting for the next data trigger, with Q4 CPI and jobs now in the spotlight. WTI is caught between geopolitical supply risk inventories and export headlines. And then finally, the DAX is pressing on near fresh highs, with corporate moves adding to the fuel. So ask yourself now, will today's PPI and retail sales confirm the steady economic story, or will they give the dollar a fresh reason to move and drag risk sentiment with it? Because, as you know, markets love certainty, but they trade volatility like it's a hobby. And with that, we wrap up today's market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to atfx.com and we'll go and experience the difference for yourself. It is until next time, stay sharp, stay focused, and trade smart.